from their ancient origins deep within the earth to their modern role as symbols of wealth and beauty. This documentary uncovers the science, history, and market dynamics behind these natural treasures. Explore how passion meets profit in a market where rarity and brilliance define value, offering a unique glimpse into the art and business of gemstones. Diversifying investments across gemstones. A strategic approach diversifying investments across various types of gemstones is a prudent strategy to mitigate risk and optimize returns. Like a diversified portfolio of stocks and bonds, a well-rounded gemstone investment portfolio balances the distinct market dynamics, supply constraints, and price fluctuations of different stones. Understanding gemstone market dynamics, each gemstone has unique attributes and market behavior. Diamonds, renowned for their stability and enduring demand, serve as a cornerstone for many investors. Their global recognition and steady market acceptance make them relatively low-risk investments, although they may not always offer the highest returns due to their mature market. Colored gemstones such as rubies, sapphires, and emeralds often present greater price volatility but hold significant growth potential. Their rarity and rising demand in emerging markets make them appealing for investors willing to take on slightly higher risks for potentially higher rewards. Lesser-known gemstones like spinel, tanzanite, and tourmaline offer intriguing opportunities. Often undervalued, these stones are gaining recognition as alternatives to traditional choices. Early investment in these gems can yield substantial returns as their popularity grows. Regional value and geopolitical considerations. The provenance of gemstones also affects their value. Stones from historically significant regions, such as Burmese rubies or Kashmir sapphires, command premiums due to their superior quality and restricted availability. Balancing such high-value assets with more accessible options can help mitigate geopolitical risks. Diversifying across gemstone forms. Investors should also consider the form of gemstones. Rough stones, often less expensive, with potential for higher returns after processing. Cut and polished stones, immediately marketable, though they carry higher acquisition costs. Gemstone jewelry adds artistic and craftsmanship value, appealing to a broader buyer base. Timing and market trends. Timing is critical. Staying informed about market trends, consumer preferences, and technological advancements in gemstone treatments allows investors to make strategic decisions about when to buy or sell. This adaptability is crucial for capturing value in a fluctuating market. Long-term versus short-term investment strategies. When crafting an investment strategy, understanding the distinctions between long-term and short-term approaches is essential. Long-term investments prioritize stability and gradual appreciation, suiting investors with long horizons and lower risk tolerance. Short-term investments focus on quick gains and require active management and market acumen. A balanced approach, combining both strategies, allows investors to hedge risks while seizing immediate opportunities. Portfolio assessment and rebalancing. Regular portfolio assessments are crucial for aligning investments with financial goals. Techniques include periodic reviews to evaluate performance, diversification, and risk exposure. Rebalancing, which involves adjusting asset weightings to maintain target allocations. For example, selling high-performing assets and reinvesting in underperforming ones enforces a buy low, sell high discipline. Tax implications. Investors should consider tax implications when rebalancing, particularly in taxable accounts. Leveraging tax-advantaged accounts for adjustments can minimize tax impacts. Building a diversified gemstone investment portfolio requires in-depth industry knowledge, strategic selection, and disciplined management. By understanding market dynamics, leveraging regional and form-based diversification, and balancing investment strategies, investors can navigate the complexities of the gemstone market Regular portfolio assessments and timely rebalancing ensure resilience and alignment with long-term financial goals. Risk management strategies, diversification. Spread investments across asset types, industries, and geographic regions to balance risk. Asset allocation. Tailor asset distribution, stocks, bonds, etc., to match goals, risk tolerance, and investment timelines. Portfolio rebalancing. Regularly adjust allocations to maintain desired risk levels. Stop-loss orders. Use automated orders to cap potential losses. Hedging. Offset risks by acquiring counterpositions in related assets. Margin of safety. Invest at significant discounts to intrinsic value for a protective buffer. Risk assessment tools. Employ models like VAR to predict portfolio responses to economic scenarios. Record keeping and inventory management accurate records. Log every transaction, including specifics about each gemstone type, source, and pricing. Detailed inventory. Maintain a catalog with unique identifiers, photos, and certifications for each stone. Technology integration. Use specialized software for inventory tracking, point-of-sale updates, and data synchronization. Loss prevention. Regular inventory audits help detect and prevent theft or mismanagement. Customer responsiveness. Detailed records facilitate faster responses to market demands or customer inquiries. Success stories of gemstone portfolios. Colored diamonds. Investments in rare, undervalued colored diamonds, for example, pink, blue, saw returns of 300% plus as demand grew. Family-run jewelry. Strategic acquisitions of high-quality rubies, emeralds, and sapphires positioned a business to profit during a luxury goods boom. Tourmaline investment. An investor capitalized on overlooked stones, leveraging a market trend for tourmaline and reaping substantial returns. Takeaways: successful gemstone investment demands knowledge of market trends, patience, and calculated risk-taking. Leveraging tools, technology, and strategies like diversification and rebalancing can enhance financial stability. Record keeping and inventory management aren't just organizational tools. They're competitive advantages in the gemstone industry.